Welcome to the Deep Dive, where we try to make sense of complex topics using curated information. And a really warm welcome if this is your first time joining us. Maybe you're tuning in via our new connection with Hira FM International in India. We're excited today because we're digging into a recent news bulletin from Hira FM International, dated May 13th, 2025. Our goal is to unpack some pretty crucial updates happening in the global diamond trade, looking at how shifts in one area, well, they connect in others.
It's definitely a key moment to be watching the diamond world. What we're seeing are snapshots of different events, but they really do paint a picture of a highly interconnected global system. Things happening at the mining level in one continent impacting jewelry sales in another.
Okay, let's dive right in then. First up, something that caught my eye about De Beers. Reports suggest they're offering secret discounts on rough diamonds to certain clients.
That's the word, yes. Secret discounts. The stated reason, or the one being floated, is to manage their rising inventory levels. Holding lots of rough diamonds ties up capital.
Sure, that makes sense from a cash flow perspective.
It does, but it's also, it's raising some eyebrows in the industry, as Hira FM pointed out. People are asking questions about fairness, about contract integrity.
Right. If you have a long-term contract at one price, and then someone else gets a quiet deal, it feels a bit off, doesn't it?
Exactly. And you have to wonder about the wider impact. Does this signal a subtle strategy shift by De Beers? Maybe acknowledging more competition or trying to get ahead of demand forecasts.
And what about the ripple effects globally on rough diamond prices overall and those supplier relationships you mentioned?
Precisely. That's the key concern. If certain buyers get rough cheaper, it could eventually create uneven playing fields down the line in the polished market. A move like this from a major player like De Beers, well, it definitely sends tremors through the entire global rough market. It affects everyone from small miners to the big cutting centers, like the ones in India, for example.
Okay, so that's a significant ripple from the rough side. Now, speaking of shifts, let's talk about Burgundy Diamond Mines. They're closing their polished operations in Perth. That sounds like a major strategic move.
Oh, absolutely major. Burgundy is basically pulling back from the midstream, the cutting and polishing part of the business. They're signaling a much stronger focus on the upstream. So mining, sourcing the rough stones, controlling the source.
Interesting. So less involvement in turning rough into polished, more focus on just finding and selling the rough.
That seems to be the strategy. And it wasn't just Hira FM reporting this. Places like investing.com picked it up too, which shows, the market sees it as a significant pivot. They seem to be betting on leaner operations and the fundamental value, the resilience of the upstream part of the chain.
So it's a bet on the raw material itself, maybe avoiding some of the volatility or complexity in the polishing market.
That looks like the calculus, yes. And again, think about the connections. A miner based in Australia decides to exit polishing. That could potentially shift where those rough diamonds eventually go for processing, impacting polishing hubs globally, maybe creating different demands or opportunities in places like India or elsewhere.
Fascinating how these individual company strategies play out on a world stage. Now let's zoom out a bit. The bulletin mentioned a drop in global jewelry exports, about 4.62% in April 2025.
Yeah, that's a noticeable dip. Hira FM International links it primarily to, two big factors: fluctuating gold prices, which always impact jewelry costs, and ongoing geopolitical uncertainty.
The usual suspects, unfortunately. Uncertainty tends to make people hold back on luxury spending.
Exactly. Consumers get cautious, especially with non-essential high-value items like jewelry. And that 4.62% drop, you'd expect that to be felt across many different regional markets, wouldn't you? From Europe, North America, right through to Asia.
It really underscores how the diamond and jewelry trade is tied into these broader economic and political currents. So, with that pressure, how's the industry responding? One thing mentioned was this push to reframe natural diamonds, focusing on emotion, legacy.
Yes, that's a really interesting counter strategy, isn't it? It's clearly aimed at differentiating natural diamonds from the lab-grown alternatives, which have obviously gained a lot of traction, by emphasizing the story, the rarity, the forever aspect. The natural diamond industry is trying to connect on a different level. It's less about just the specs, more about the meaning.
So appealing to the heart, not just the head or the wallet, trying to build that unique value proposition against the often cheaper lab-grown options.
Precisely. It's all about the narrative, the storytelling, to maintain that distinct place in the global market.
And speaking of lab-grown diamonds, the Hira FM bulletin had a pretty big piece of news there too. De Beers getting out of its Lightbox brand.
That is a big deal. De Beers, who kind of legitimized the LGD jewelry market to some extent by launching Lightbox, is now stepping away. As the report suggests, this definitely shakes things up. It probably signals a more, shall we say, volatile phase for the lab-grown segment.
Volatile how? Price wars. Consolidation.
Could be a mix of things. Sellers globally who are invested in lab-grown diamonds, they'll certainly need to rethink their inventories, their pricing, their whole strategy, really. And again, this decision by De Beers, a global entity with roots tracing back to various regions, but impacting markets everywhere, including India, where lab-grown production is significant, it will have worldwide consequences for the LGD trade.
It's quite the turnaround. Interesting to see that turbulence happening just as we hear about a price surge in a specific part of the natural polish market. Small stones, 0.30 carat.
Yeah, up 13% since January for those 0.30 carat polished diamonds. It seems counterintuitive at first glance with everything else going on.
So what's driving that specific increase?
According to Hira FM, it boils down to very targeted global demand, specifically in the engagement ring and bridal jewelry categories. So even if the overall market feels some pressure, strong consumer desire in a key sector, like bridal jewelry in certain regions, can still push prices up significantly for those specific types of stones globally.
Wow. So demand for engagement rings, maybe particularly strong in, say, North America or parts of Asia, is directly lifting the price of these smaller polished diamonds that might be cut and polished in India or elsewhere.
Exactly. It's a perfect example of how interconnected yet specialized the market is. Demand in one specific application in certain parts of the world influences global pricing for that specific good.
Okay, so let's try and weave this all together. We've got De Beers using discounts, maybe affecting rough prices globally. Burgundy mines shifting focus upstream in Australia. Overall, jewelry exports are down due to macro factors. Naturals pushing an emotional story against lab-growns. The lab-grown market itself seeing a shakeup with De Beers' exit. And yet, specific small diamonds are surging because of bridal demand.
That's a great summary. You see how these threads, they really do connect. Strategic decisions by miners, economic headwinds, the natural versus lab-grown dynamic, specific consumer trends. It's all part of the same complex global web.
It really paints a picture of an industry in flux, constantly adapting. It's not just one single trend, but all these forces interacting.
Absolutely. And understanding these connections is key, I think, to getting a real feel for where the diamond trade might be heading. It's more than just isolated events.
It definitely gives you, the listener, a lot to think about when you see headlines about diamonds or jewelry. There's usually a deeper, interconnected story.
Indeed. And what we've discussed today is really just a snapshot based on that Hira FM International Bulletin. There are always more layers, more nuances in this fascinating global industry.
Well, thank you for joining us for this deep dive. And a special thank you again to our new international listeners joining us perhaps for the first time via Hira FM International. We've actually just launched this international channel, so we really hope this detailed look at the global diamond trade was insightful for you. Please do subscribe to this channel, and your comments would be incredibly helpful for us. They can help us understand what kinds of deep dives you'd find most interesting and valuable going forward.
Yes, definitely let us know. And maybe a final thought to leave everyone with. Considering all these interconnected shifts we've talked about, the discounting, the strategic pivots, the market pressures, what do you see as the single biggest opportunity, or perhaps the biggest challenge, facing the global diamond trade in the coming year? Something to ponder.